morning, everybody, and thanks for joining us this morning on Q&A with Whitey. Trust you've been having a great week, and you're ready for this morning's conversation. It's going to be great. Obviously, I'm not in my usual surrounds. I've bitten the bullet. I bit the bullet yesterday, and flew down to Sydney, ready for the ABAs that are on tonight. We're a long-term sponsor of the ABAs, the Australian Broking Awards, and we've got to present several awards tonight to people, so looking forward to that. Be a bit of fun. And first things first, of course, make sure you got your morning tea ready, got the coffee all underway. That's cool. And I'll move that out of the way a little bit. Morning tea, don't know what you've got, but I guess this is the benefits of being in a hotel room. You can order what you like. So some cool morning tea there. Anyhow, that gets things started for this morning. Thanks again for joining us, and of course, thank you to our sponsors and for all that they do in support of the FBAA. So to ALI, Bluestone, Finstro, Prosper, Lend, Suncorp, OnDeck, Pepper Money, FAAMC, Strive Financial, Insurance Advice Net, Credit Fix Solution, and Trailbook Loans. We thank you for your support, and also from my point of view, thank you for your friendship. They're all really good people. So thanks everyone, and really appreciate your support. All right, this morning we're going to have fantastic conversation and hearing from the leading ladies in our industry in the broking sector. I'd like to welcome Anusha from One Stop Loans, Jill from New Age Vehicle and Asset Finance, Rebecca from Two Red Shoes, and Athena from Complete Finance Management. Ladies, welcome and join us. How are you all? You good?
Good, thank you. Good morning.
Yeah, excellent. Hey, ladies. And I think we've still got, who are we missing? Rebecca. There she is. Go, Rebecca.
Hello.
How you going? You all well? Good to hear, good to hear. Thanks for joining us this morning, and hope you've all got your cup of coffee ready to go. And we're going to dive into some questions that have been excellent. The questions that have been sent through to ask you ladies for your advice and guidance on, but I'm very much looking forward to your thoughts on the industry and also getting to know you a little bit better. And one thing I like to do when we're speaking to people we haven't had on Q&A before is to get a bit of a background on yourselves and understand where you've come from to be here, because to me, the journey in life is all important. I don't look at jobs and careers. It's the journey and the experiences and the value that brings to all of our lives and what we do in business and in our personal lives as well. So what I like to do, I'm going to ask each of you just to give me a little bit of background as to where you've come from before you were doing what you were today, and then giving us a heads up on what it is you do today. A bit of a background. We won't take too long about it, because one thing I can assure you, time will disappear on us. So we'll get through things fairly quickly, because there's some important questions we've got to get through today. And I might start with you first, Anusha. And importantly, I believe you are a finalist tonight for Wellness Advocate of the Year. Is that correct?
Yes, I am. Yes, thanks, Pete. I am for the Wellness Advocate of the Year.
Fantastic. I'm a huge passionate of the wellness of our industry, as you probably all know.
Something, Pete? No?
Sorry? Yeah. So wellness advocacy is a big thing in my books, and I'm not sure if we've sponsored that particular section. I'll have to have a look later. It'd be nice to be able to present the award if we are, but I'll find out later.
Hey, the signal's not that clear, but I'll tell you a bit about myself. I was. Can you hear me?
Yeah, can hear you now. Yeah.
Yep. So Wellness Advocate of the Year. So that's coming up tonight. No.
Yep.
I'll come on the phone. I'll do the phone.
All right, you do that. Let me jump to Jill. Whilst you're doing that, Anusha, we'll come back to you. Jill, tell us a little bit about you. Technology, it's always fun, but we won't worry about that. Give me the Jill story. Where are you based, by the way? Are you in Sydney, Melbourne?
No, Perth, not my office.
Yes, well done, well done. We like having our borders shut from the rest of the world, Perth, Queensland, whatever.
So,
well
20 years in the car industry, and decided to go, which I thoroughly manager, so I got in there very, very young, obviously. And, and then I was lucky enough to be with John Hughes for many years, and he's taught me so much. And he's a fantastic man, still is, and million miles an hour, you know, he just doesn't stop. So, but then I decided to go into the brokerage side of the business. And from there, which I thoroughly enjoyed, which is great, we had Yes Loans. I was with Steve Sell. And then that's whenever we left John Hughes. And then John brought it back, and whenever he did that, there wasn't room for two people to be figureheading. So I moved on and now do my own thing and loving it. Absolutely love. So I'm in more the vehicle and equipment finance, so anything from coffee machines at cafes through to the big Tonka trucks on the mines.
Nice, nice. Our chairman's an ex-DP. Oh yeah.
Say again?
Our chairman's ex-dealer principal, and he worked with John Hughes as well in the past. Tony Carter.
I'm sure he had many good stories.
Now, I used to do F&I too. There's many good stories in that game. So what were you doing before finance, or have you always been in finance?
I was a debt collector. Started at 16 as a debt collector for, then it was called Telecom, and the and SEQA, the Electricity Commission in WA. So yeah, that was so I went from taking money to giving it. Much better. Happy people to deal with.
Well, let's call it not taking, collecting.
Yeah, well, that's it.
From those that weren't too keen to pay, but that's okay. Oh, that's good. That's interesting. So, Athena, tell us a little about yourself and Complete Finance, but also what were you doing before finance, or have you always been in it? And where are you?
Where am I? I'm in Melbourne. So I'll be here for a few more weeks.
There you go. Okay. Yeah, we're thinking of you.
We're very lucky here in Melbourne, aren't we? I started off as a secondary teacher. I'm actually born and bred Melburnian, Victorian. I started off 3 years teaching. Jeff Kenner came in 1992, closed half the schools down. So I moved on to finance. So I've been working in finance since 1993 with various credit unions, Commonwealth Bank. I moved to Queensland in 2004. I worked for a broker there and a building company. That's where I learned more about the brokering world. And I started up Complete Finance Management in September 2007 when I moved to Adelaide. I obviously moved to Adelaide for personal reasons. I was married at the time. And so, yes, I've been in finance 26 years, running my own business 13 years, and we've now got an office in Melbourne and Adelaide.
Fantastic. That's excellent. Well done. Great journey. Great journey. Rebecca, how about you? Tell us about Two Red Shoes, but also how long have you been in finance? What were you doing before you were in it? It's a little bit of your story.
So interestingly, Deanne Lee, for those of us who are Finance and Coffee members, Deanne has actually published my Humans of Finance story this morning. So there's quite a bit of information there, a bit of background. 19 years in finance. Two Red Shoes has been going for 9 years this year. 9 years this year? No, actually it's 8 years this year. So it's been a very long time. Completely different. So my original training was as a journalist, and then after that I did 11 years of graphic design, and in that process I actually worked in a company. I did accounting, I did payroll, I did production management. I basically did all of that, all of those sorts of roles in what I'm kind of calling an apprenticeship in small business. So I absolutely love that element and love being able to bring that to this table.
Yeah, that's an excellent background. And sorry, how long have you been running Two Red Shoes for?
Two Red Shoes started in 2012, so this is our 8th year, I guess, but 19 years in finance overall.
Yeah. What I always love finding, this is why I ask this question, is that the wealth of experience and knowledge in our industry always impresses me. It doesn't matter how many people I talk to, and I talk to a few people every year. The experience we have, to me, just constantly backs up and supports why the best interest duty, as an example, is really a no-brainer. We've got the experience here, people who have been doing it their entire career, which is why their career's gone so long. putting clients' interests first, and the knowledge and skills that's been gained from that is just absolutely fantastic. Thanks for sharing that with us, everyone. I love hearing those stories, and yeah, it's great. It's great. So tell me a little bit about your markets. So Jill, obviously you're in the motor game with what you're doing in asset finance. Tell us a little bit about that. Is it commercial as well as business? Is it motor, trucks, cranes? Is it jet skis, caravans? What does that part of the business look like? And for when you're out attracting people, you know, into your business, do you have a specific way of going about it? Is it referral based? Is it social media marketing based? What's that little bit of strategy, without stealing your IP, but just sharing a little bit of knowledge as to how that works within your business?
Yeah, so I'm very lucky that my business has grown organically, but you do have to have a web presence. So in March of this year, I have finally gone onto Instagram, and I'm trying to post as many times as I can per week. And but it's the model that we've got. I've got there's 5 companies in one that share the same office. So we've got an accountant, financial planner, settlement agent, and mortgage broking, and then myself that does the asset. So it's just we can cross refer to each other and we can help everybody. So especially the mortgage side of it, where people may need more borrowing power, so we'll consolidate their debt, and we do that quite often, which it just means that they can probably, you know, buy that house they didn't think that they could, and you know, so we've always got lovely, happy customers, and they always need cars. It's the one thing going through the last couple of months. People always need money and they always need cars. So even if it's stopped for a couple of weeks, it's still picked back up again. The other side, my husband's in cars, so it's I see both sides of those. and housing, you know, housing was another thing. So with people, we just are in quite an enviable position being in finance.
Yeah, excellent stuff. How are you finding Instagram? We used to do a fair bit on Twitter, and we've dumped that. I just don't think it works.
I don't tweet, but Instagram is, you know, I'm slowly building a following. I just, you know, you really just have to keep posting, and you know, I try and do it 3 times a week. I've just moved house this week, so that didn't happen, but we'll start again next week.
Yeah, moving house is a all-consuming exercise of time and frustration. I know about you. Actually, I've been lucky that the last couple of times I've moved, I've been, well, as I do normally, I'm not at the moment, travel a fair bit, and I've left from one house one day, and my darling wife has packed everything and moved it, and I'm right back to a whole new house. She's wonderful.
Too lucky.
Very fortunate. Yeah, very spoiled, let me assure you. Yeah. So, Athena, what about yourself? Tell us about the structure and style of your business. You know, whether it's residential lending, business lending, what it is, and where do you go to find business, whether it's naturally grown or organic? Is it through social media as well? What's that look like with yourself?
We do all types of lending. So we do residential, commercial, the business, asset finance. Business has grown organically through my existing database. So I've been very fortunate. I haven't had to really market our company. We get a lot of referrals from financial planners and accountants. A lot of the clients that I've had since 2004 when I started in Queensland, and it's funnily enough, some of them have ended up moving from Queensland or Sydney here to Melbourne. So I get to see a lot of them. I've helped their children, I've helped their other family members, and I've done a lot of their family and friends from the various different states as well. So I've been very fortunate. I do Facebook media. I don't do Instagram or Twitter. And with Facebook, I have a guy who does my campaigns, and we post on a regular basis, not only about finance, but about anything that's happening in Australia at the moment as well.
Do you find that generates business for you, or is it more of a brand awareness sort of thing?
It's brand awareness. It doesn't generate anything. I did think about stopping it again, but every time you try to do that, they advise you against it in order for you to keep your branding out there. So it's more just brand awareness. Yeah, mine. what helps me is I'm obviously an AFG broker, but we've got Smart that we use. And with our Smart campaign, we have touch points throughout the month with what's happening. The minute we send out anything about the RBA or anything that's happening about our finance industry, automatically in that day, I'll get like 30, 40 emails from clients saying, thanks for that, it's time to review where we're at. So we always do an annual review for our clients as well, so see where they're tracking and if there's time to review their rates or if there's any other needs that they need.
Well, that's an excellent marketing tool, isn't it? I mean, I understand the piece with Facebook and some of those medias, and I guess it's a similar vein as to what I've been doing for a long time for the FBAA. You've got to keep your brand out there. That's why we sponsor. You'll see the FBAA sponsoring just about everything we can that's within our means, because again, it's brand awareness. If you don't, then you're not there. And it'll be interesting. Like, so I bet you do right. I'd be. Yeah, I bet you'll find you do get business from it, but it's the reinforcement, and it appears to come from somewhere else. But the brand is constantly being reinforced at different things. I know when I used to do a lot of advertising, it's just that repetition. As you see it here, you see it there, you see it somewhere else, and that one creates the trigger. That's excellent. Well done.
That's actually
Rebecca,
true.
Yeah, sorry, go on. Athena,
I was going to say the other thing too is that we actually sponsor various local clubs as well, so both in Melbourne and Adelaide. So anybody who wants sponsorships, we actually do assist with sponsorships for, you know, whether it's indoor female soccer, the South Melbourne football club here in Melbourne and things like that. So we try to give back to our clients as well and use them as a preference point for any referrals too. Yeah.
Excellent. Very important piece in business is giving back to your community somewhere, somehow, in whatever fashion that is. Well done. Fantastic. So I'll jump across to you, Rebecca. Same question for you about the business. What style of business is it that you're writing as far as lending goes, whether it's commercial asset, consumer, and really where does the business come from? Is it just naturally referred? Is it social media again? What does that look like? And I'll come to you next.
Really strong focus on residential and
yep.
For me, bit of asset. My favourite asset to finance was a forklift. I don't know why that just stuck out to me. That was fun. And definitely business is all referral based. Almost everybody comes through and says such and such said to call. And for me, social media is really vital. Everybody's following. I'm really lucky to have this quirky, cool brand that everybody buys into, and it's amazing the interaction that people will have with the brand. So people will send me. I'll get gifts in the post. I saw this and I thought of you. Sent me a sticky tape holder that's got shoes on it. Send me a pair of speakers that are red shoes. All this sort of stuff. I'm really, really lucky. And it is such a quirky, fun brand that you can have so much fun with it, and people they enjoy that interaction. I've even had, I guess I kind of you know your brand's working when your competitors are noticing. So I got a message through Instagram once, and it was from another company saying, hey, I was walking down the street and I saw these red shoes in the window and I thought of you. Sent me a photo. I'm like, one's working.
Yeah, that's great, isn't it? And yeah, that sort of unexpected interaction from recognition of the things is always a great sign, as well as imitation. So imitation is the greatest form of flattery. So excellent. Oh, that's great. Anusha, how are you going there with Signal? We got you all right there now? Anusha? Hello? Just need to unmute your mic.
Hello, can you hear me? I was muted by
You're muted. I know, I've done that many times, let me tell you. Welcome to these sort of webinar platforms. It's always fun and games. Hey, look,
I've come away to Newcastle, so the signals are a bit weak. So
that's all right, no worries. Give me your story, Anusha. Tell us a bit about your background, a bit about your business, and how you go about generating business. So whether it's referral, social media, just give us a little snapshot on what that looks like.
Okay, well, a little bit about myself. I've been in finance over 25 years nearly now, and got out of school, and after a year joined the banks and work my way up all the way to corporate. So knowing from, you know, I introduced people or clients into phone banking over the phone when phone banking came out, all the way through to using the Hogan system, then moving on to, you know, home loans, and learned every bit of the banking process. So that's where I had the passion to learn about banking, but I found that my strengths were in obviously helping clients and selling products that suited the clients. So that's where I initially started. Decided I was a BDM. If many of you brokers out there would know me, is because I've been a BDM. I was a BDM for Australian First Mortgage when back in the days for 2013-14 time, and moved into doing broking for a bit. Then I was headhunted by Bluestone to be a BDM for a while, and I was there since they came out again for 3 years, and decided to go out broking again. So this time I did it with my partner, my husband, and we both now work together. He's got his business, I've got mine. We're both mortgage brokers. It's not fun sometimes at home, but we got to live through it.
Do you compete after the same clients? Or do you kneecap him on the way through?
It's more of argument on, you know, where we're going to place them. So I might decide on, you know, this is better, and he might decide on something else. But, you know, eventually we work something out with the customer and we proceed with that. So we work in the same office. We've recently opened up an office in the local area. And we've had quite a bit of an attention through the banks as well as consumers and the local community. So that's going really well. We've been brokers for 3.5 years now, and the business has just been, we've got the roller coaster of going up and down with Royal Commission and everything, but hey, look, everything gave us a lesson. We've learned, we've grown better, and we've done better, and that's what makes us, you know, a good business people at the end of the day, I think. Now how we market, obviously our office is pretty obvious in the main streets of Wentworthville, and I've been out on social media. I've got a lot of clients who my friends and everyone who comes through social media for loans through that way. I've got still connections through our existing database, the touch points, as already mentioned. We get a lot of inquiries about refinances and purchases at the moment. It's going out the roof as well with all the schemes that's been put out. So, you know, for me, it's more finding the right solution for the customer. I find that we diversify in our business. So I don't just do home loans. I do commercial, business loans, asset finance, as I won the asset finance broker of the year last year from FBAA, if you remember, Pete.
I sure do.
Your costumes, we've taken photos. So,
my costume, it's not like me.
Diversification has been the bread and butter for me. So basically, where I can service, that's why I called my business One Stop Loans. So I wanted to be a broker, not just on home loans alone, but to diversify and use my skills that I've learned from the banking hierarchies that I learned, use it to my own benefit.
Very good. And when Anusha talks about getting dressed up for our conference, that was me last year. It's pretty scary. Hey, one thing you said about social media, what area of social media do you use? Do you have a particular favourite? Do you go to a Facebook or a LinkedIn?
Oh, look, Facebook seems to be working better for me. I guess I'm from the 90s, born in, 90s group. So I guess all these people we're still stuck with the Facebook. I'm not up Snapchat. LinkedIn, I've started to explore a bit more and start learning on those. But Instagram, if I want a good picture, I go in there and load up an Instagram picture because it picks up nice colors and stuff. But otherwise, yeah. So Facebook is mainly where I've got my homepage for my business.
Our marketing team have got us into Instagram at the moment, so I'm curious as to how it is. And you also touched on the Royal Commission a little bit there before as well. And I think one of the things that is so important, and this is my 42nd year of being in this game, and when you go through these things, if I look back in the past on recessions and GFCs and so on, you always, for those that come out the other side, and the vast majority of people on this, when you come out the side, you come out so much stronger. You're really in a good space when you come out the side of this. And those who don't come out the other side of it probably weren't going to be in a good space anyhow, regardless. So it does actually work out, you know, in the overall scheme of things really well. And I think everybody should take great comfort. If they can get through this, they'll get through anything, and they'll have a bigger and better and more successful business as they go forward. And I most firmly believe that post-Royal Commission, post-implementation of best interest duty, open banking, and a whole host of things that are coming downstream, we have every opportunity in our industry for brokers to take 70+% market share of originated loans in this country. UK are already past that, and there's no reason why we wouldn't be able to achieve that as well. So it's these little things that create an increase in value propositions as why consumers and borrowers will come to a broker. It's the experience, it's the skills, it's the brand, it's everything that we're doing. I do have a question here I do want to ask, and this may not apply to some of you, so if it doesn't, sorry about that, but I've got a couple of questions about running staff and how to manage it within your businesses. Have you got any guidance on advice of that as far as employment structures and how you've gone with staff? Anusha, do you have staff? Besides your husband.
I do.
You can treat him as staff.
I do. I basically have my staff on contract basis. I try to hire young staff to come into the industry. So because sometimes when they're already trained, they might not suit our own work style. So I like to train them and you know, and have them the way I guess our whole office works together. So young staff, I've got a few females joining us as well. A little bit of push more to get them in, but you know, eventually they have agreed and had to go, and they're enjoying it. So my passion is to grow the staff, not just hire them, do the same thing over and over again. So most of the staff that I do hire, I actually get them to do the Cert 4 initially. While they do that, they learn the basics and then grow them from there.
Yeah, I think that's an important piece of getting the foundations right. I've always had that philosophy with the FBAA, and I've been criticised for it in the past, and I'll stand up to it every day of the week, where we don't enforce the diploma. From my point of view, when you're new to an industry, you need to get the foundations right, because then you can build something on top of it. And if your foundations are dodgy, doesn't matter what you do after that, it's going to crack and fall over. So getting those foundations is so important. And I like that idea of younger people, and I guess getting people not like me, old and stodgy with bad habits, but come in and can be the people that you need them to be, follow your ethos and philosophy, and have that opportunity to develop. I think that's a really great path. Rebecca, what about yourselves? Do you have any staff working with you?
I do, and I think it's possibly my greatest challenge. The balance, not so much. I mean, I agree with you. Absolutely, growing staff and lifting them up is the best way to go. If you can improve a staff member, it benefits both you and they. And I'm a big believer in growing people generally. It's the management issue. It's the time that it takes. It almost takes you as long to manage them as it might do to do the job yourself. I mean, it hasn't been my forte, that's for sure.
Fair enough. How many staff do you have at the moment, Danny?
I've only got one at the moment, one and also one and a casual.
Yeah, okay, cool. What about you, Athena?
I'm the same as Anusha. I actually have hired younger people. I've hired them when they're 21, 22, get them to do the certificate for the foundations, and then obviously manage them to become brokers themselves. So I've got 2 full-time wage people. So I put them on wages, and then I've got 2 contractors. The contractors that I have are young females who want not to become brokers, but prefer to just do face-to-face as far as calling the banks and also the lodgements for me. So they do the lodgements while I do all the interviews and that. So I have found that has worked a little bit better for me now. So I've got a mixture of both. Mainly young.
Yeah. Geez, I hope I don't wind up out of a job. None of you will employ me. I'm too old. touch wood, that could have been a real jinx. Yeah, I'll move on from that one real quick. I think that's important play, that you play to people's strengths and play to your needs. And I know some people I've spoken to have sort of done a lot more of the processing work themselves and found out, no, I'm much better off out selling. I'm much better out talking to people and doing the business as such, and finding somebody else to do all the paperwork for me and making sure that flows quickly. So it's interesting. It's good, Athena. Jill, what about yourself? You're in a different lending sphere, I guess, to the other ladies. Do you have staff? How does that work in your space?
So I employ mine full time, and I was just really lucky. Whenever I was talking earlier about the John Hughes, I actually got my Cert 4 in training and assessment, and I trained for John Hughes about just under 100 people how to sell finance, which was a lot of fun. But in that, it was a journey for me as well, as to what works and what doesn't, and also having patience and understanding staff needs, which is a big thing, because it's not back when we first started in this industry, you had to be bleeding out of the eyes. Now there's there's so much more compassion, and there's mental health awareness, and so many things that you have to be compassionate about yourself and allow your staff to have those days. You have to be really mindful and thoughtful now. It is a different world, and as I said, I'm always learning about that. But on the staff side of it, I think having full-time employees, because of the module that we have, is great. And it all comes down to culture and how you want your staff to be, so that in the way that they treat the clients, so that you've got them for life. You're not as good as, you're only as good as your last year. You want those clients for life. So, and I think that's a big thing to breed into people as well.
Yeah, very much so, very much so. Hey, Jill, I don't know if this impacts the asset area as much these days or at all, but do you guys getting hit with clawbacks? I want to have a clawback conversation. So where your upfront commissions get pulled back on?
Yes, I had one, which was really horrible. It was a $150,000 car, and the guy went rotten on it 2 months before it had been running for 2 years, or just under 2 years, 2 months shy. And this particular bank claws back if there's a loss within the first 2 years, 100% of the commission. So that one hurt.
Yeah, I have been very vocal for more years I can remember, even before I moved up to Queensland. So that would have been 2009 sort of era. And so it was before that I've always been against clawbacks. I think it's the most disgraceful thing in our industry that somebody does all the work they do for a particular job they've been engaged to do, and it all happens, and then a life event transpires, whatever that may be, and all of a sudden you lose your income, and you've had not only all the expenses to get to that point, then you've incurred business expenses after that and all around that. Nobody reimburses you your expenses, yet in the mortgage game, and it won't be the same in what you're doing, Jill. You're probably in a worse position because you got 100% of what you're owed. You don't have trail, then you lost 100%. On the other flip side, the poor mortgage brokers, when they settle a loan, they only get half of what they're entitled to, principally the upfront. The rest of it's paid on trail. Over time, that could take you 4 years or whatever to sort of get the balance of what the 100% originally was meant to be. And some ratbag's got your hand in your pocket for 2 years, but half the money that you got with the same problem. Expenses on, nobody reimburses it. If you break the law, if you commit fraud or anything like that, you're going to own the penalty. We all live that life. We do something wrong, we own the penalty. So I'm not talking about that. I'm only talking about life events. And I just think it's criminally wrong and makes zero sense for anyone in business to say that works and it's a good thing. I'm not saying we should change our commission structure, but the whole idea of clawbacks needs to be booted out the back door.
It's very archaic.
And may only apply after, if a loan refinances in the first year, you'd probably say, I'd have to own that one because something must have been wrong. Now, it's a real generalization, and it doesn't mean it's the case. But you probably say, if I cop it, the first 12 months is probably the only thing I give away. After 12 months, hey, look, I've done my job. Life happened, or shit happened, whatever the case may be. Move on. I did my job. So I get really and very passionate against that. Okay, well, that's interesting. Athena, how do you go? What's your thoughts on clawbacks? Do you think they're a reasonable thing?
No, I agree with you. I think they need to go because we do all the work, and it could be something so trivial that makes them refinance or sell a property. It doesn't even have to be a life event. It could be something else that they've done. For example, we've done all the work, we've paid the expenses to look after them, and and sometimes, like our loans, sometimes might take 3 months to settle. You've done all this work to get a great result for the client. I know with us, if we had to refinance a client within that time, I definitely agree. Yes, let's get clawed back because we're getting paid back again from the other lender. And that could be because the clients have decided that the best lender, or we've decided that the best lender at the time was ING, but then they decided to demolish their property and build. ING don't do construction. We've got to refinance. We can wear that because we're retaining the client. But where something has happened and you've done all this work, I think we do need to review the clawback system.
Yeah, most certainly. And there may be things that come to the market in the not too distant future that may work within the whole realm of that conversation if we can't get change to happen. But that's a conversation for another time. But of course, the thing is, and this is a part of my gripe, as business people, you're employing staff, which is why I was asking the employment question. Yet you've had your income taken off you, and you've already paid their salaries. You can't go back and say, give me your salary back. Yeah, terrible. Rebecca, how about you? What's your thoughts on clawbacks?
Yeah, absolutely agree. And in the instance that you mentioned in a refinance, well, there's plenty of talk about that happening where there's been bank incentives to lure them away with a great big chunk of cash. How's that on us? We do the best that we can on the day. It's not our fault if someone lures them away with a big chunk of cash another day. I do a lot of work in first-home buyer land, and I know that what I'm seeing is the financial pressure of that first mortgage is taking a toll. And I'm seeing a few first-home buyers coming undone in those early days of a mortgage. As much as you can school them, as much as you can educate them, and if they're selling up in those first 12 months because the relationship has come undone from that financial pressure, that sucks that I'm popping the burden for that. But that is it is.
Yeah, and look, we all keep marching forward, but in my mind, it still doesn't make this right. There has to be a resolve to it. We're doing a couple of things from an FBAA side about this as well on a research piece, but because I've locked horns many times with government on this, and basically I need to deep dive on some additional data that in one is not relevant to our industry, but it's to prove a point. I mean, I've got the data internationally. I chair the International Federation for Mortgage Broking, so we've got data from all around the world in our industry, but I'm going to broaden that into other sectors, and we'll help that support part of that argument and debate. Anusha, what about you? What's your thoughts on the whole clawback conversation?
Look, I agree with you guys, and I think clawback is one, depressing every time we see money go away from the account when we've spent the money and time and effort. Sometimes it's a lot of effort that we put in to get those loans for some of those customers, especially those small business or self-employed clients, which are majority of mine. And when, like Rebecca said, when banks throw money at them to refinance, the good thing about self-employed is them have no idea how to go and get a loan. So that way I've got some pull in to when they do call and go, can you get me that money? Then that's when I sort of jump in and do the work. But look, I do also sometimes charge them fee for service if I don't feel comfortable about that particular client, where they do want to look at maybe refinancing or leaving me at that time. But it's all case by case. But from where I sit, yes, we do the work. We do a lot of work sometimes, and just can. when we get pulled out from all the before, then that is very that's when I think of the "Are you okay" day. That's you know, and I really feel for brokers, especially I get messages from brokers, even if they're not part of my aggregators. You know.
Are you okay day?
It was very also during Royal Commission. It was during Royal Commission. It was also a bit of a scare, you know, because people were brokers were very frightened to go ahead and do refinances or purchases because they were scared whether Royal Commission is going to affect these or blah blah blah. So you know, I'm pretty happy that FBAA is a big sponsor of Are You OK Day, but in the same sense, brokers do go through anxiety and you know, because money, we all have debts, we all live a normal life as well. So when things are taken away unexpectedly, then you got to face the consequences, and that anxiety will kick in. Doesn't matter whether we're brokers or doctors, anxiety is going to come in.
I could not agree more. I mean, don't get me wrong, that was one of the foundations as to why I started the awareness ambassadorship back in 2016 in this sector, because it became a really dark, taboo subject. And I knew of brokers and corporate friends of mine that were being looked at sideways because they're going through depression or had anxiety issues. Lenders talking about pulling accreditation and stuff. So wait a second, that's absolutely bullshit. You can't do that. So I made it my own personal cause to get on and make sure we keep banging away. And there's a whole host of things we're doing, new things we'll start doing too shortly once they get a little bit further down the track and out of the intenseness of COVID, to again further support people. And look, again, the reason I talk about clawbacks is a part of that mental health and wellness journey. We need to solve this. It's completely unfair. And as you said, Anusha, the stress, the anxieties, when you've done all this work, you've still got salaries to pay, rent, phone bills, God knows what, and yet somebody's gone, taken it away from you. Just wrong, just wrong. I don't think the lenders would like it if we did it to them every time they screwed up. Maybe we should. I don't know how. But yeah, we'll move on. I'll get myself into trouble. And look, a part of this too, and it was our conversation the loudest at the Royal Commission about how clawbacks impact the best interest duty. Yeah. So if you're going to act in the best interest of the client, month 14, or you know, at the end of 12 months, you do your annual review, Athena, as you're saying, and in month 13 or 14, it's appropriate to refinance, but somebody's going to take 100, maybe only 50%, but they're going to take a large chunk of that original up front. Now, I know it sort of revolves, but at the same token, you had all the expenses and costs to do it in the first place, and you've got the ongoing expenses and costs to do it again. So far as I'm concerned, it shouldn't be taken away. I think if you're acting in the best interest of the client and it happens, I guess my trade-off is after 12 months. I prefer it not at all, but I've got I guess there's a bit of a trade-off there, that it just should not apply. I don't think we're going to achieve it, mind you. At the moment, we haven't. But I'm a bit like a bulldog with locked jaw. I ain't given up, letting go of the bite just yet. Let's move on from that conversation. Tell me about how you look after your clients. Anusha, what do you do with your existing client bases? Do you have regular communications? What sort of things is it, and what sort of conversations is it with your existing clients that you have to keep in touch with them?
As you mentioned, you know, every year reviews their birthday, anniversaries. There's always a card or a gift or some sort of touch point to make sure that they know that, you know, we know that it's their birthday. I've got it all set up on the system. We've got marketing emails going out with the latest product offerings and what's out there in the market. I do free RP data reports for them. When they do want to go buy a property, here's the report. Make sure you understand about the property before you go buy it. And that report is pretty good because it shows what was it sold and, you know, what sort of market increase has been in that area. It's got everything about it. We also help them with, you know, pre-approvals is something that sometimes, as you said, you know, we put our time and effort and might not even proceed for many months. So something where I do is we do our CRA checks, their income, and everything seems to be okay. I'm happy to put a pre-approval, which most banks are not doing at the moment. Sometimes they're too busy to even check for pre-approval these days. You know, the banks I'm talking about. So, you know, we do all that. There's a lot of people who have been with the Royal Commission and investment properties and stuff are pretty shy to go buy properties at the moment because they think they've got too many properties and they're going to be in shit. The banks won't even give them the loan. So in those cases, I get referrals from the existing clients who find these clients and refer them over to me. Word of mouth has been the biggest referral source for me. And the conversion rate from word of mouth has been much stronger than any other form of clients being introduced to me.
You gotta love that, don't you? Excellent. Rebecca, what about yourself? What do you do to look after existing clients?
I'm not doing the RP data reports, although can do if they request them. I'll add to that an education piece in terms of doing videos. Clients love them. So you just jump on, and even an ad hoc video that you might recording your car in the driveway that might actually be surreptitiously aimed at your sister who's complaining about doing her tax return. People will love it. They'll grab it, they'll share it, they're interacting. So that sort of stuff is simple, easy for us to share our knowledge. And it's funny what we assume is boring and such assumed knowledge that clients don't understand and they really appreciate having shared with them. So the simplest little things that we can share is really valuable for them. I'll tell you what, the most clicked on page on my website is actually when does your first repayment come out? Who would think that that's what people want to know, but that is it.
There you go. How cool is that? Excellent.
Yeah.
Excellent. Athena, what about yourself?
The same as the girls as well. So we've got our campaigns, our marketing campaigns. We've got newsletters. We've also got our own personalised information that goes out with changes that happen. So we send that to all our database. We have the touch points with birthdays, anniversaries after the post-settlement of the loans, because Rebecca is correct with what she's saying about the first repayment and having the direct debits correct. So we always double check with the bank, send them an email to make sure that they've got all that. Any milestones for them, whether it's anniversaries or if they've had a baby or a wedding or something like that, we always send a gift to them as well as we find out what happens. But for us, again, it is the marketing campaigns with those touch points. At least it's about 12 times a year, excluding us calling the clients for their annual review as well.
Okay, excellent. Excellent tips in all this. Jill, what about you?
Pretty much the same. Within the first 30 days, we diarise to call the clients, and I've decided to do that as opposed to the email because we're hiding behind. So many people still like to have the human voice and receive phone calls. So anniversaries such as they've had their loan for a year, 2 years, 3 years, that will be a phone call. We do send out Survey Monkey within the month of them settling just to find out how we did, how we can improve. And then we've got the usual EDM. So
isn't it interesting how some of those old tried and proven methodologies, so even the simple thing as a phone call, works so brilliantly well. We've all gotten caught up in digital medias, and I know I'm sure you're all the same, but emails run hot and you tend to go delete, 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 too hard. So unless something really captures your eye, it sort of goes to the keeper. But those personal touches, we even do some things by the old snail mail. It takes longer, you got to plan it. But if I know at home, if I get a letter that says "Dear Household," it goes in the bin. If I get a letter that says to Peter White, I open it. Yep. It's a bit like emails in my books inside, and those personal touches. I think they are so key in this environment, especially in these times. Through COVID, I know many brokers and possibly yourselves have been doing this as well, is just reaching out, seeing how your clients are going during COVID without any real specific agenda except to help if they need help. It's had huge inroads to writing more business, but also just keeping that contact with your clients. It's about the relationship. It's not just a transaction. And I think brokers are very lucky and very fortunate they're in the position they can to be able to do things like that.
It's also
yeah.
the referrers that we
It was also what? Sorry, Anusha, broke up a little bit.
It's also referrers that we have a touch point too. So referrers need to be, you know, greeted. Can you hear me?
Yeah.
Yeah, referrers. Gotcha. Yep. Yeah, no, that's very, very right too. You need to keep in touch with those people that are referring business into you, and make sure that the wheels keep spinning and turning. It's very important. Hey, Jill, are you seeing any unusual issues or challenges with the lenders that you use in the asset space at the moment, that because of COVID, and if so, how have you worked with those challenges, if you've had any?
Yeah, and it's time management it's gone out the window. It's just managing our clients' expectation. So that they're not disappointed. I put an application on Monday. Now, we usually do get a 24-hour turnaround. We can get a 4-hour turnaround. Sometimes we can have it settled within a couple of hours. I mean, that's the difference with our lending side. I put that application in Monday, rang yesterday to find out how it was going, and was advised we'll probably have an update on Friday. So it's so we're just keeping, obviously, in constant contact with our clients, just to let them know. I'm apologising more than I ever have, because our clients are used to everything happening so quickly in our section of finance, and it's just really blowing out. So even towards the end of the financial year, where people were ringing me 2 weeks before saying they wanted to purchase a vehicle and, you know, to take advantage of the instant tax write-off, and I had to let them know that we can get an answer, but it may take, there was a processing time for commercial loans, commercial cars, 11 business days before they were being looked at. It's just not good enough.
Yeah, I mean, there's a real disconnect, isn't it? I mean, the government comes out with these great stimulus initiatives, but the lenders crap all over it because they can't deliver. It annoys the hell out. It must be very frustrating for the politicians. I mean, politicians can be frustrating in their own right, mind you, but yeah, here they are trying to do some things that are really good, and then trying to deliver on it in a practical mindset can be very challenging. Okay, well, thanks for that. Athena, what about yourself? Are you seeing any challenges with lenders in what you're doing, and how you're dealing with them if you are?
Very frustrating. I hear what Jill says, because we do some asset finance as well. It was taking triple the time to get things through. But with residential, there's some banks that are really quick, and there's some lenders that are very, very slow at the moment. ANZ would have to top that list, unfortunately. And it doesn't matter whether it's a purchase or a refinance. I understand refinances we can't escalate, but even purchases, if they're not even pre-assessed, they won't even be escalated by our BDMs. We have had some loans in the system since start of June, and settlements are like tomorrow, and the file, if we're lucky, would have been picked up, and all we get told is just get an extension, just get an extension. That's all great. However, though, the vendors aren't understanding. The real estates haven't changed at all with their timeframes of what they impose for getting approvals these days, despite having COVID, despite having the SLAs that are being advertised. There's no, it's again another disconnect similar to the grants that have been offered with the government and the lenders delivering. It's the same here. The real estate agents understand because they do know with brokers or banks themselves how long they take, but their clauses don't marry up with what these timeframes are. We're very lucky that if you communicate, and our constant communication, but sometimes we've had to get like 3 extensions, especially if, like ANZ was at 30 days to pick up a file. If 30-day settlement, that doesn't work.
Yeah, no, exactly right. We had, I won't name banks this time, but we had lenders come saying it's taking 40 to 50 days for certain lenders to actually pick up a file before it even got started. And we had an example, well, it would have been early this week, of a file that was proven to be lodged in January that only just got approved last week.
Wow.
July. Yeah. And it wasn't because the fact the deal wasn't put together properly. So these are trouble. Let's hope with the advent of open banking, and thank goodness we've got a wonderful minister, Senator Jane Hume, who's sitting in front of that, pushing the open banking out to the marketplace. And although there's still a rollout that's technically started 1 July, but it's not going to impact mortgages till November, and not all the banks, it's with the major banks at the moment, and then it'll be with the non-major banks and so on from early next year. So there's a bit of time drag still to come. We kind of hope it will get us past all this sort of stuff. Rebecca, how about yourself? Are you seeing any challenges?
Yeah, I think it's ticking every box for every single bank and every bit of criteria that they want. So I think I find myself researching every single deal, even though I've done 1,000 of these before. You know, can it still be done? What changes come through for that income type? What changes come through for that employment type? What additional criteria, what additional documents, what additional forms do I need to fill out? Questions I couldn't quite answer. It's taking so much longer to do everything. And then I had a conversation with the BDM the other night, and he said to me, probably the statement of the centre, he goes, I feel like I don't even know what I'm doing anymore. And I thought, oh my God, that is every broker today.
Yeah, it's a real challenge. But yeah, I think if there's any word of advice to that, rest on the fact, and this is why I love the story at the beginning of this about people's journey experiences. You've got the experience and the knowledge, and what you're all saying is the same thing, is it's that communication with clients. So you know your stuff, communicate with your clients, and that's the best that anyone can do in this environment. What we need is the other end of the stick to tidy up their act and fast and get their shit together, basically. Get it right.
We
Anusha, what about you?
They're under as well, though. We understand it's just hard everywhere.
It is, but a lot of these people were took their call centres offshore in the credit processing areas, and they should have been employing people here. And then when all that crap itself through COVID, the whole thing was just a stack of cards that collapsed. I mean, time to rethink that one, guys. Yeah. Anusha, what about you? Are you any challenges with what you're seeing? And if so, how are you dealing with them?
Definitely. I've had, I don't know why Scott Morrison said that you can go pause your repayments. So I've got clients who can afford to make payments who pause their repayments because they're scared that they might run out of money because coronavirus could be, you know, out there and they might lose their job for future or whatever the case is. But now they want to take advantage of the low fixed rates and they want to refinance, and hallelujah, I can't do anything. I'm sorry, go back, because the banks are saying go to make 3 months payment and then we'll consider you again. So so that's one big challenge, not one customer. I've had every second or third customer go through this at the moment. When it comes to asset finance, I think that's an issue as well. I think you'll agree with that, that if they pause their repayments on their car loans, no one wants to write them.
I've got an answer on the asset side, but there are some mortgage lenders who are being fairly progressive in that understanding of if you've had paused payments, now you want to take up fixed rate movement. It's not the major banks though. Dig around the sides and the fintechs and so on, and what basically you have to look for other options, and they're not in the mainstream. They will help the client out, and this is the thing, is helping the clients. Look, I've run out of time. I'm really sad. I could keep talking for another hour. I've thoroughly enjoyed speaking with you this morning. I really appreciate you taking time out of your day to join me, and I'm sure everyone who is listening around the country have been really impressed and engaged with the conversation. And again, thank you so much. Stay well, especially if you're in Victoria, and I'll look forward to seeing you all soon. So thanks, ladies. It's been fantastic.
Thank
I really
you.
appreciate it.
Thanks,
See you
Peter.
later.
Bye-bye. Thank you.
Bye.
Bye, guys. Bye. Have a good day.
Bye.
You too.
You too.
Thank you.
See ya. All righty. Well, that was a great conversation. I thoroughly enjoyed talking to those ladies. There's an incredible wealth of knowledge and experience in our industry, and it not just it doesn't cease to amaze me. I get great pleasure and joy out of the fact our industry is like that. We've got great people with great knowledge doing great things for their clients, and yeah, it's fantastic to see. This is why I love this industry. It's why I've been in it for so long. So fantastic. All right, well, thanks. Coming up next week, we've got a new panel for you. Well, not a panel, I hate using that word, but we've got a whole lot of aggregators joining us next week. Sorry, not next week. Oh, got it wrong. In a fortnight's time, Thursday the 30th of July. And we're going to have a chat to them. We're going to find out more about what's happening in the land of aggregation and see how they're finding things in the marketplace. That will be an interesting conversation indeed. So make sure you get ready to register for that. and join us in a fortnight's time on the 30th of July, the Q&A with Whitey, and we're going to talk to a whole lot of aggregators. So again, thank you so much for joining us. We'd like to thank our sponsors for all their support. They're great people doing great things, and we're very, very fortunate to have them supporting what the FBAA does. And for now, you'll get an email from us shortly with a little survey on it and your CPD code allocation. Make sure you do the survey for us. It's a big help for us. Thanks. Have a wonderful week, and I'll see you again in 2 weeks' time. All righty, take care. Bye for now.